Ali, thanks so much for coming on the show. We're really excited to have you on with us.
I am honored. Thank you so much for inviting me.
Yeah, absolutely. So, Ali, tell us about your investor identity.
I'm a buy and hold investor. So I'm basically buying for long term, creating long term wealth and passive cash flow. So that's really what I've been focusing on. I'm not into wholesaling or fix and flip because I feel that's more like a job. And I'm really looking, for generating passive cash flow for the long term. So buy and hold model fits best, for what I was looking for.
I like that. So you mentioned a few reasons. One of them was the passive aspect. Wholesaling, flipping houses, that's another job. But what you're talking about is kind of riding the wave of that passive income, generating those streams of income. And with that being said, when you buy and hold, what are the things that you're buying and holding?
Well, for now, I have my local portfolio in Tampa Bay area, single family, duplexes, triplex, and a fourplex. So the largest unit I have is a fourplex. And I'm actively looking to buy a larger multifamily or a mobile home park.
And out of
And
the assets, I'm sorry, go ahead.
I'm self-managing also to learn the business. And when I say passive, it's kind of semi-passive because I am self-managing, mainly because I want to learn the business. And I feel down the road when I hire a property manager, if I know how to manage, then it's going to be much easier to keep an eye on them and make sure that they're doing what they're supposed to be doing. So that's what I'm up to.
There's a lot of great points there. And now I want to ask if you had to choose between a particular asset class, you've worked with single family, you've worked with small multifamily, what would you say is something that you favor, multifamily or the single family?
Oh, multifamily, absolutely. Because economies of scale, and I can just see if I had a 40-unit building, that would be so much better than a fourplex. But a fourplex is better than a single family. Because with single family, if it's vacant, you're 100% vacant.
Right.
But in my threeplex, if one unit is vacant, at least two others are paying the rent. Or same thing in duplex. And definitely prefer multifamily over single family.
Yeah, I agree with that. And what you said about economies of scale is what attracts a lot of investors to the multifamily and encourages them to grow and go up in terms of the number of units in multifamily. You've got just so many ways to kind of leverage the economies of scale with the bigger units. So, Ali, tell us about why you like real estate over, say, a mutual fund or stocks. What attracts you to real estate?
I think real estate, I personally just like real estate. I think it's a lot more fun when you have a physical asset than, something that's not in your control, like a stock. And
Right.
stock market has been on a roller coaster lately.
Yeah,
Um,
no kidding.
yeah, I feel like, I'm not one of those people that just shun stocks. I do have a, mutual fund and stock portfolio. But I think this is part of my overall allocation, that real estate is actually a very important and big part of it. Because, it's tangible. You can count on consistent cash flow. And, even going through downturns, it's not as volatile as the stock market, which can go up 40-50%. Real
Sure.
estate, yes, it can go down, but then if you have the wherewithal to stand through during that period, then you'll come out ahead. So that's why I really like real estate, and most importantly, the passive cash flow. And they're not making any more land, so
That's right.
need some place to put their head at the end of the night. At the end of the day, even though technology may really advance and everything is going online. So I'm a big believer in residential real estate, and that's what I focus on.
That's
Nice.
fantastic. There are a couple of things that you mentioned there, being a buy and hold, right? The stock market's going to fluctuate up and down, and that's pretty much out of our hands. But you don't lose money unless you sell. The same applies to real estate, right? If you're buying for cash flow and the value of your property decreases by, I don't know, $20,000, as long as you don't sell, you didn't lose that money, and you're still getting that cash flow. So that's fantastic. that you bring that up. What I wanted to ask you is, you seem like quite the self-starter, very ambitious, very go-getter. How did you go about learning all of these things when it comes to real estate?
Just to give you a little bit of a backstory, I came from India with $40 in my pocket. I, of course, did have my medical skills. I was, trained as a doctor in India, and then I did my further training in Canada and US. So I've worked hard all my life, and made a comfortable life for me and my kids. But being a single parent and working so many hours, a few years ago, I said, okay, I don't want to be burning out, working all the time and not really having a life, working pretty much like 6, 7 days a week. So there has to be some other way to be able to generate passive income. And I was kind of interested in real estate. An acquaintance of mine, she said, oh, let's start looking at real estate. So I was not too keen on at that point, but I thought, okay, let's give it a try. And then she calls me out of the blue and she said, hey, my buyer's financing is going to fall through, and it's a 2-bedroom, 2-bath house. You want to buy it? So I agonized over it, should I not? Then I said, okay, what's the worst thing that can happen? It will fall in value 5,000, 10,000. And if I don't like it, I can always sell it. It's a single family house, to an end user. So that's when I decided to take the leap and bought that house. And then I didn't want anything to do with it. I was scared. So I gave it to property management. I don't want to manage tenants. I don't want to deal with tenants. So they rented it out, and I was on vacation. And when I came back, the check was in the mail from the rental company. At that time, they were actually physically mailing the check. So I looked at that and I said, whoa, this, I am making money whether I'm working or not. So that's when the light bulb went off. Researching, and I figured it's not rocket science, I can figure this out if I put my mind to it. So I started researching, listening to podcasts, reading a lot of books, going to RIA meetings, talking to other investors like yourself, and then just educated myself and then started buying. So this was about 4.5 years ago. So,
Wow.
not anything for a year because the market has been pricey, but for the most part, what I have is working really well.
Yeah, that's fantastic. Love so many things about that story, Allie. And what you did, most people don't do, right? Like, I mean, the way you took action and actually bought one and learned what would happen, and now it's benefiting you, right? Now you not only profited from that investment, but the education you got was priceless. It allowed you to continue to explore new assets and new ways to put your money to work for you. But it never would have happened if you didn't have the courage to take that first step. So, that's really cool to hear how your story unfolded there. One
Yeah,
thing
the
I
first,
wanted to ask you,
yeah, go ahead.
yeah, sorry, go ahead.
I said the first step is so important, and that's the most difficult, and but you have to overcome fear. And most of what we do everyday life, we are taking a chance. We're taking a risk just by going out. We don't know if we will meet with an accident, but we still act in spite of our fear, go about our daily life. So this is just a little bit more risk, but I feel if you're educated enough, then it's a what I call smart risk, or it's a calculated risk. So then you have to be comfortable with that, because that's the only way to grow.
Yeah, I like that too. The different types of risks there. It's calculated risk. I like how you said it's a smart risk, because you really think about it. You do your research. It's not like you're just guessing at something here. You know, um, Also the education component that you mentioned there is really huge, and I think that's what holds a lot of people back for some reason. A lot of really smart people just sort of think about it as a risky thing or an unknown or something they don't know about. They never really go and educate themselves and allow themselves to learn what they need to do to take that first step. So, so yeah, there you did a couple of those things and took the step that most people won't. So that's pretty cool.
So when we're talking
Um,
about, sorry, go ahead, Adam.
yeah, I was just going to kind of follow up with about kind of in the same track that we're talking here. What have you learned about investing that you would like others to also learn?
I think my number one message would be, act in spite of your fear. Yes, it's scary. Yes, it's the fear of the unknown. And a lot of people think that since real estate does involve substantial amount of money, then it's perceived as more risky. But I feel that if you have the knowledge and if you do a thorough job educating yourself and get comfortable with that fear and also change your mindset to accept that it's a trade-off, so you risk something and then you gain something. So I think for the long-term goal, it's really important to get over that and just take action. Of course, knowledge and action, not just jumping in with
Right.
not educated.
Yeah, you could do it. It probably wouldn't work very well to jump in with no direction and no education, but you are taking action. So when people say that it's risky, and I'm sure you've had these conversations with people, how do you explain to them that it's probably less risky, or it's not any more risky, any riskier rather than the stock market?
Yeah, I agree with you. I think there is this notion that is risky. Just because the numbers are bigger, for example, you can buy a stock for $1,000, and if it goes down 50%, you lose 500. But if you're buying a house worth 70, 80,000, then you are talking big numbers. So I think
Right.
that scares a lot of people. At the same time, if you just put everything in perspective, there is a strong rental demand. So you have multiple exit strategies. You can rent it out. You can sell the house down the road. Even if the market softens, you have to hold on to it. You're not losing any money unless you have to sell. And also be smart about it, meaning don't over leverage, don't put 90% loan on it. So if the market corrects and you can't make the payments, then you stand to lose that property. So I think that holds a lot of people back. But I think if you just analyze everything and are thinking it through, then to me, it's actually less risky than investing in the stock market.
I like that.
I never realized how many renters there were out there until I started educating myself to buy my first rental property. Honestly, renters are everywhere. Like so many houses are actually rental houses. And before I became an investor, I don't know why, but I just never thought about that. I just thought most people owned their homes or, were paying for their homes. But actually, there's a there's a very high number of renters out there. And so one of the biggest fears I had is kind of what you mentioned when I bought my first rental house. And it was, what if I have trouble finding renters? But you don't, right? I mean, they're everywhere. It's
You
usually not a
don't. And
problem.
yeah, now I use a leasing agent, but anytime, and she's able to rent everything pretty much within 2 weeks. And some of the leasing I do, the ones that are closer to me, there was a house that I had locally, a 2-bedroom, 2-bath house. That actually was the first house. So the first set of tenants, when they left after 4 years, then we fixed up the house and I put it at usual rental sites, and it was rented within 1 week. And I had so many inquiries and so many people wanting to see. And I think we're becoming a renter nation as such.
Yes.
Millennials are way more mobile. People don't like to own. They like to be mobile and have less hassle. I actually have a
Hmm.
friend. She used to live in a big house. She lives in Northeast, and she's now renting in the city, and she loves it. She said, "I don't like all the headaches of maintaining a big house. The kids are gone." So even like older generation people and middle-aged people, once the kids are gone, they're actually downsizing, and many are
Right.
choosing in urban areas rather than having a big mansion.
It's true. And the other thing I kind of discovered after I got the house is if you make it really nice inside, you have absolutely no problem renting. So I'm sure yours are nice like that because they're renting so quickly, and mine do too. But you can go look at some that are for rent, and I'm shocked that people would rent it, that they would live there. But there are tons of them like that. So if you just make yours pretty nice inside, you'll rent it fast, because that product, there's not a ton of that product out there,
Yeah, I
especially in that
agree.
like B, low B to high C class area.
Yeah, I agree. I think it's worth putting the little extra, especially in a single family like the house I renovated. I chose to put granite countertops and better cabinets and the real wood cabinets, and nicer fixtures and nicer flooring. Um, and to me, it was worth it. You spend a little bit more, but then you attract a better quality tenant, and also you have the option of selling it to an end user, so you don't have to redo everything.
Right.
For the multifamily, I think I have to be a little more judicious because it has to be clean and functional, but it doesn't have to be fancy because a fourplex will always be a rental, unless
Very
it's a
true.
owner occupied in one and then the other units are rented.
Yes.
So it's a
Smart.
balance. I think you don't want to over improve for the purpose of the unit. Um, I keep that in mind.
Yeah, there is a fine balance that you mentioned, right? You can't put, I don't know, diamond something and then expect your rents to go up by $6,000 a month. That's just not going to, there's no correlation there. There's a certain
Yeah.
threshold. Ali, one of the things that we love about your story is that you aren't doing this full time. You were doing this while you were working, when you were raising a family. And that we want to touch on that a little bit, because I think that's highlighting that those who think that, I can't do this, it's a full-time thing. You absolutely can. You got to start small, of course. But in your experience, what would you say is more difficult, the 9 to 5 that you have being a doctor or real estate?
Definitely being a doctor is more difficult than real estate. I think real estate is, to me, it's fun now. But yeah, being a doctor is definitely more challenging because, you are taking care of patients and you are making decisions, that could affect somebody's life. So we have to be very diligent and, really be on top of our game. Real estate I don't think is that difficult. It does need persistent, and you have to be consistent in your learning. And I definitely believe it's doable holding a 9 to 5. People have time over the weekend or in the evenings, instead of like watching TV and spending so much time, I will hit the books and read. And now I work part time, so I'm still working. And still have an active job, and by time off, I'm doing real estate. But I think um, for somebody to have a 9 to 5, that's not an excuse not to do something in real estate if they really want it. As they say, you're either moving towards pleasure or moving away from pain.
Very
That's
true.
a big motivator, especially moving away from pain. And for me, I was moving away from pain of working so much, working all the time. So then that was a very strong motivator for me, and I decided I have to make it happen. So I think once you decide, and then give it your best, I think there is nothing preventing you from being successful.
So,
Absolutely.
Ali, I know a lot of high earners who like real estate a lot. In fact, if you look at most of the richest people, they're investing in real estate. But I'm not really talking about the elite wealth. I'm just talking about people who are high earning employees. They still do like real estate. What are some reasons you've found why that is?
I think high income earners do like investing either actively or passively in real estate because it has multiple benefits. There are many tax benefits of investing in real estate to offset, what typical white collar income. So that's something that really attracts people to real estate. Consistent cash flow that you can count on. I'm invested passively in multiple syndications through my self-directed IRA, and they pay like clockwork. If it's monthly distribution or quarterly, so that check is coming. That cash flow is coming, and you can count on it. Not like stock market that you don't know what's going to happen the next day. Next day. And the tax benefits are great. I think those things are very attractive in terms of owning real estate for high income earners.
Yeah, that's a
Absolutely.
very good point. I mean, we're not CPAs by any means, so take this with a grain of salt. But we know that high income earners, if you are earning that wage as a 9 to 5 and you make a lot of money, you're going to have a really big tax problem. So what do? You find some way to make your tax problem be a little bit smaller, and investing in real estate is a fantastic way to do that. And when you mentioned the self-directed IRA, how did you come about that? That's not something that's pretty regularly advertise a lot of it. If you work a 9 to 5, they give you a 401k option, but that's it, right? Nobody talks about the self-directed IRA. So be curious to learn how you came across that.
Yeah, I think I first heard about it in a RIA meeting. About 4 years ago, when I became serious about real estate investing, I started going to a lot of local RIA meetings. And I think that's when I heard about it. And I said, oh, okay, let me look into that. Then I researched it a bit more, talked to multiple companies, and decided to go with one company. And it has been great. I've invested in 6 different syndications passively, and they're all across the country, also spread across different asset classes, different geographies. So that helps to manage risks, so you're not putting all your eggs in one basket. And that has proved great. So consistent cash flow, some pay monthly, some pay quarterly. And I know people talk about self-directed IRAs being hit with UBIT and
Mm-hmm.
having high expenses. These are two of the relative negatives. But in my experience, UBIT is very little, and the expenses, the cost of having a self-directed custodial account, that is offset by, when you're making double-digit returns, so that's easily offset by that. So I'm not concerned with the expenses. I think it's a great vehicle.
That's a very good point. And for those who don't
Yeah.
know, UBIT stands for unrelated business income tax, and that has to do with one of the things that involved with your self-directed IRA. If you want any more questions on that, we can point you in the right direction, but we don't know all the information on that. So when you're talking about these syndications, Ali, how did you decide on this person or this syndication was the right syndication for me or for you?
Yeah, I think I listen to a lot of podcasts, and when I listen to syndicators, you kind of get a feel for who they are and what their philosophy is. If they're conservative or not, and what's their business model. Then I usually set up a one-on-one call with them. I talk to their references, and I talk to references if those references have referred any other people. So you're kind of removed. It's like second degree reference. So that helps. I do a background check on the syndicators. I look through their financials. I want to see that they are transparent, that they have all the financials and all the goings on regarding that particular syndication that's available for all the investors to see at any time. And I also, check their underwriting. If they're projecting rent increases of 6% year after year after year, that's not going to happen. That's not realistic. And as you guys know, numbers can be massaged, to present whatever results they want to present.
Right.
And I also want to see that they have been in the game for long term, that they have actually, gone through a recession period. So those are, some of the highlights. I actually have my, due diligence on the sponsor, due diligence on the asset, due diligence on the market. I have my whole checklist. So if anybody wants to, talk to me about that, I'll be happy to share that. So yeah. And of course, the 100-page PPM that they provide you, the private placement memorandum, I actually read through all the pages, believe it or not.
That's
Wow,
great.
that's impressive.
Yeah, I'm very conservative, and I feel like we work hard for our money, so we need to invest it very wisely, and not be quick to jump into any syndication. So I have to take my time, mull over things, and then only when I feel comfortable with the person, then I go ahead and invest.
That's very
Yeah,
thorough.
that's
Wow.
great. Yeah, it is. That's fantastic that you're so thorough, and it's smart. I mean, that's what people should be doing. And not everyone is that thorough, but you should be, because you're taking it seriously, and you're controlling your investment there. That's fantastic. So Ali, you mentioned a lot of things there around some analysis, and doing some discovery about the not just the deal and the operators, but you also are in some different kinds of syndications. It's clear that you like to educate yourself. For those who may be interested in what some of your favorite resources are for education, does anything come to mind, like any favorite podcasts or books or websites or anything like that?
I do like bigger pockets a lot. When I got started in real estate, I did a lot of research on bigger pockets. I think they
Hmm.
have some really good information there. I listen to a bunch of podcasts like yours, and then if I find an operator that has enough assets under management and who's been in the game a long time, then I reach out to them individually, and then I have multiple, calls with them over different times just to feel
Sure.
comfortable with them. So it's a process. So I don't decide. I take at least few months to decide. And
Absolutely.
a lot of syndicators would say, okay, our minimum is like 50,000. So I would ask them, hey, I want to dip my toes in the water, and they would let you in for 25,000. So that's one way to kind of try them out, um, and then see if you like it. Then you can of course bring more capital to them and invest with them.
Nice.
I like that advice that I want to dip my toes in the water. That's a very smart thing because yes, there may be a minimum of 50,000, but hey, you can kind of convince them that this would be a better fit for you if it was this amount of money. So that's a very good pro tip. I really like that. What would be your last piece of advice for those who are on the fence about real estate or just investing in general? What would you have to say to those people?
I would just say that don't let the fear hold you back. I always look at what can go wrong. What's my worst case scenario? Like the first purchase I did, um, I went over what's the absolute worst that can happen. And it's not going to go down to zero. So that was for sure. It will lose $5,000-$10,000 in value, yes. And if I don't like it, I can sell it. So so my downside risk was low, and the upside was much larger. So that made me comfortable. So I think so for somebody sitting on the fence, the best thing would be to analyze the worst case scenario. What's the worst that can happen? And if you can live with that, then that's great. Because usually whatever we fear, either 90% of that doesn't come true, or if it does come true, it's not as much as our mind makes it out to be. So I think
Mm-hmm.
it's a lot of like mindset and looking at it not from a fear point of view, but from a practical and analytical point of view. What's the worst case scenario? And if you can handle that, then I think we should go for it.
Great advice for somebody who's new or thinking about getting into it. That's fantastic. So Ali, we wouldn't be the tech guys who invest if we didn't ask you a tech question. So Kevin and I are curious about if you have a favorite piece of technology from the medical field.
Yes, absolutely. I'm a radiologist. So we deal with technology all the time. All our equipment, MRI, CT, ultrasound, everything has technology in it. We wouldn't be able to do what we do without technology. But I think out of all that, the best piece I like is what we call PACS, the Picture Archiving and Communication System. And basically, it's how the images from the machine are archived, and then they are sent over to any workstation that I can access. So I can be anywhere in the country and can read. So people read. I read remotely, and I'm able to generate reports looking at the images. There are thousands of images that come across in few minutes. I could be based in Europe or Switzerland or Australia and still read for the hospitals here in the U.S. So that technology to me is amazing.
Nice. Yeah, that's awesome. That's great technology. Ali, thanks so much for coming on the show. It's been a pleasure to have you. We're really glad you came on. Where can people get in contact with you if they'd like to reach out?
Sure, I have a website. It's called yourwealthmd.com. That's MD as in doctor credentials. Um, and, I would especially like to send a message out to women, especially, single women, that if I can do it, anybody can. And being in a full-time job, you still have the option. And if you put your mind to it, I think it will really pay off in the long run. I have enough passive income coming in now that I don't have to worry about, if I were to get disabled or if I were to lose my full-time job or part-time job, so that gives me a lot of peace of mind going forward. So I would definitely like to encourage everybody, especially women. It's not rocket science. We can figure it out. And I'm
It's
happy
not.
to help anybody who needs, who wants to talk real estate.
Yeah,
That's
that is
awesome.
amazing advice to end with. We love
Yeah,
that.
love it.
Well,
Best
thank you so
ending ever.
much.
All right. Thanks,
Thanks,
Allie.
Allie.
It was great having you on.
Yeah, thank you so much for inviting me. Thank you.